The economy is showing no signs of stabilization, and this means that companies are taking it into their own hands to provide some sort of stability and plan for the future. Now, what does this mean? Of course, many different things, but one of those things is layoffs. And I think it's important to be aware of the things that are happening with these massive companies because they have a lot of resources and they're able to extract information that we're not able to as individuals, and we're then able to look at this information they're providing, see the actions and steps they're taking, and kind of prepare and plan for what may be coming in the future, at least in their eyes. So let's just jump around from a few different massive companies and see what they've been doing. Let's start with Snapchat. They have laid off 20% of their employees, which began in late August. So 20% of the 6,400 person workforce is unfortunately going to be losing their jobs. They've done this for a number of reasons, and what I can see is that it was mostly concentrated in a division called Zenly, which is a mapping service they picked up in 2017, but also some other areas of Snapchat as well, very internal as well. But the concentration is kind of on those outer factors, which means that they're kind of just trying to hunker down, focus on their main service, and make sure they're doing what they can to make that survive, continue it, and kind of adapt as they see fit. They're not trying to spread too far, get too thin on anything. They're reeling it back in and making sure that they're able to keep going on their main services. I do want to thank today's sponsor of the video, which is Dossier. It really does help me out, and they make amazing products. I actually use them every day, and one thing I want you to look out for is the fact that they will be dropping candles soon, which I'm very excited for, especially during the fall months. It's always nice to have a nice scent to your home, so keep an eye out for that. Dossier reproduces classic high-end luxury scents at a fraction of the price, keeping the exact same high quality by cutting out all the expenses and the brand tax. Any scent is $39 or less, while designer scents range from $50 up to $280 in retail. This powdery tobacco scent is inspired by a line from Tom Ford at a much more affordable price. There are free exchanges and returns forever. Dossier has a welcome offer with up to 20% off the website. However, you can get up to 30% off your first order by using the discount link in the description of my video. Dossier has a new payment method that lets you earn store credit. Select cash at the last step of the checkout and you can earn yourself a $10 bonus credit and even get rewarded with 10% store credit on every order after that. This one is absolutely crazy how many people they've laid off and kind of the growth to then reduction of the company, and that is Robinhood. As we all know, they exploded in the last few years as individuals were trying to get investing and figure out the stock market and learn about it. And Robinhood was a very simple tool. You can learn, you can expand your knowledge and kind of dip your toes in it without much risk, if you will. There's not trading fees. It's very simple. The platform is very readable. So it's had a lot of growth, and I can actually tell you that in 2021, they grew from 700 people to 3,800 people, and that's just in 2020 to 2021. However, in April of 2022, just a year after that growth, they cut the headcount by 9%, which is 300 people, but that's not it. It gets worse. Then in August, the company announced that it would cut another 800 jobs, or about 23% of the staff. So that is a massive reduction in their employees. They grew way too fast, and part of that is due to the economic situation that we're seeing. The stock market has not been having a good year. There's been a lot of uncertainty. There's still a lot of uncertainty going forward with how long this may take to recover, if it's going to get a lot worse, and a lot of signs are pointing to the fact that it may just get worse before it gets better. How long it's going to take, nobody knows, but they're preparing for the worst in that sense. Now, this one is very, very interesting to me. We're going to be talking about Peloton now, and Peloton actually had an explosion when the pandemic started because everybody was working out from home. It was very high-tech equipment. It was very luxurious. It was something that people thought, I'm going to spend some money and I'm going to make myself healthy for it. I'm going to buy something that's going to be with me for a long time. I can work out from home. I don't need to leave. So people were buying Pelotons. That expanded massively over the pandemic. However, like we saw with Robinhood, a little bit too quick, a little bit too much, and unfortunately they have to reel it back in. Reality hits them. Now that the economy is really hurting, people aren't spending this money on something so expensive. So they have had 3 different rounds of layoffs. In February, they fired over 2,800 people. They move on to another round, and the 3rd round in August, which means a total of more than 4,150 jobs have been removed from Peloton. So that is a massive amount. Their stock is down something like 90% from the all-time high. They're in a really rough place. There have been rumors that they are going to be purchased by another company, and the biggest front runner at the moment seems to be Amazon. So we'll have to see what happens there. But a very unfortunate place for Peloton to be. Their outlook is not very positive, even with the potential of a buyout coming. That can always shift things up in many different ways. The amount of resources that can come in are going to be very drastically different from what they have now. But at the moment, the outlook isn't good. They're trying to clean it up, trying to maintain as much revenue as they can, as much of that profit as they can, rather. So they have reduced that many employees, and it's very unfortunate. So we've looked into social media, we've looked into fitness, we've looked into investing, and now we're going to be taking a look at Shopify, who has laid off about 10% of its workforce, which is about 1,000 employees. Now, Shopify is another great example to look at because e-commerce has been booming. It's been projected to continue booming regardless of the fact that there's an economic downturn. Of course, e-commerce is here to stay. It's only going to get bigger in the long run, whether that be 5-10 years. The projections are very high, and they have still laid off 10,000, or rather 10% of their employees, which is 1,000 employees. Now, this one is shocking to me because they have had, once again, insane growth of the last few years. Shopify's stock had exploded, and it has come down massively among all the rest of the tech stocks that have been taking a big hit in the past 6 months or so, 6 months to a year. But that says a lot. Shopify has an insane amount of resources, an insane amount of growth, and likely some more projected growth to come, but they're still reeling it back in because they're uncertain. They don't know what's going to be happening in the coming months. They're hurting in certain places. Of course, they're still making massive loads of money. However, they are reeling it back in to make sure they protect themselves and basically provide themselves to be in the best place they can moving forward, regardless of what happens. So they're starting that process now. And I think that's a very important message to take, that, you know, you might need to go ahead and make some choices to protect yourself and the assets you have, and make sure you can continue going with the things that are most important to you and protecting those things. So whether that's cutting costs on the luxury items, the really expensive versions of things that you don't really need, whether that means that you're going to start having to cut down on some hobbies, whether that means you need to downsize in any way. There's a lot of things you can do to kind of reel it back in, make sure you're spending your money where it needs to be, putting the rest aside for a rainy day, because that's what those companies are doing right now. And that's unfortunately what many people should be doing right now as individuals as well, just to prepare for the worst. And if the best happens, that's lovely. You'll have a lot of extra resources at your hands to go ahead and jump back in. I hope you guys did enjoy this video. If you enjoyed the information, a little bit of a breakdown as to what's happening there, I would appreciate if you drop a like, subscribe to the channel, stay up to date with future videos, and thank you to Dossier for sponsoring this video. As always, affordable product, and you're getting an amazing quality back, so it's kind of a no-brainer there. Hopefully you guys do enjoy those products if you do buy them. My link is in the description, and with that being said, I'll see you later. Thanks for watching. Peace.